It's true. It's day 2 of the annual meetings of the African Development Bank Group. And today is just a quiet day here in this room. There isn't much that is happening inside the Sava ballroom, but tomorrow this is going to be the center, it's going to be the nerve center of this meeting. Today, so many other meetings are happening in other places, from the amphitheater to Lenana Hall, but today here is a bit quiet. It's being prepared, it's being prepped for tomorrow. This is where all the action will be taking place. But of course, we'll continue to give you more update on what's happening here, and of course, tracking the conversations that are taking place in this place. We just now want to focus our attention on a subject that is growing very fast, and a trade that is becoming or that is gaining more traction on the African continent. And we are talking about the carbon trading. According to McKinsey estimates, the carbon trading in Africa is estimated to be valued at about $600 million US. Now, they say that this is actually a drop in the ocean. Africa can actually trade more when it comes to carbon trading. And guess who is joining me on the set? I'm joined by Kayo. He is the Chief Operating Officer of Verst Carbon. Is one of the pioneers of carbon trading in Africa, in Kenya. And so he's going to guide us through this concept and where Kenya lies, and where is the nexus, or where is the nexus between carbon trading and these annual meetings. Thank you very much indeed for joining us, Evans. First of all, help us understand. There has been a lot of conversation on climate financing here. Yesterday, one of the forum, the speakers were saying that when you look at Africa's need when it comes to climate financing, is about $277 billion US, but what we are getting is about $30 billion US. And so there was a push to try and encourage more African countries to exploit carbon trading. First of all, help us understand, what is carbon trading?
Thank you very much, O'Brien, for having me on your show. So carbon trading is basically a mechanism for bringing in new forms of financing into climate action. Formed during the Kyoto Protocol back in 1997. It became active about 8 years later, about in 2005, after a number of piloting exercises. And essentially what this does is that it moves financing from those people who are polluting to activities in various places around the world that are contributing towards tackling climate change. And they're contributing towards not only tackling climate change in general, but specifically tackling climate change through emission reductions and emission avoidance projects. What I mean by that is, if you are in Kenya, and you spoke to me a few minutes before you went live on air, that there are farms that you can put together to have trees there and have those trees do some sequestration potential, or have some sequestration potential. We can leverage that sequestration potential by calculating how much emission reductions you've had during the course of the year. And those emission reductions can be translated to carbon credits, which is basically just a representation of 1 ton of emission reductions, or 1 ton of carbon dioxide equivalent, that can be sold to companies that are polluting abroad, and they can transfer that financing down to us in Africa to engage in that much needed climate action. So essentially it's just a mechanism to move financing from developed nations to developing nations to enable climate action to take place in an efficient manner. And that actually contributes to us filling in the financing gap that we have in the sector that you heard about yesterday.
Yes. What you're discussing here, or what you're identifying here is what we are calling the polluter pay principle. But critics of this concept, they are saying that this is akin to the West, or the developed countries paying developing countries for their bad manners when it comes to climate change. Do you agree with them?
To the extent to which financing really needs to flow to the continent, I agree that the polluter has to contribute towards financing projects that lead towards mitigating the actions that they've caused. I do believe that it is important for us, if we are to participate meaningfully in climate action, we need to have that kind of support. We need to have that kind of financing coming in to help us build these projects that contribute directly towards emission reductions and emission avoidance. And these projects, or rather these climate action that Africa needs to take part in, has to be financed some way. We cannot finance that out of our own GDP. We cannot finance it out of our own revenue generation mechanisms. There has to be a creative way through which that comes in. And one of the lowest hanging fruits is basically that particular polluter who has the capability to actually provide that financing and have it brought back to the continent for us to take meaningful action in climate action. Now, people would say that that is actually contributing towards what you've just called bad manners. But we can also look at it from the lens of it being a deterrent, because I can't think of many organizations that will want to have more expenditure on their balance sheets or on their income statements as being expenditures towards going to purchase carbon credits for their mitigation actions. So it is a deterrent in the such that from time to time you realize that there are organizations that will want to reduce the amount of expenditure that goes towards buying carbon credits, and they might look at sustainable means of ensuring that emission reduction is achieved by cleaning out the entire value chain, or making sure that the entire value chain is carbon neutral. Yes.
And you see, the conversations around carbon credits, is gaining traction. And here in Kenya, the government has actually published the regulations around carbon trading. How big is this business, and have we even scratched the surface?
O'Brien, I'm glad that you mentioned that you laid the context very clearly when we started. That at the moment we're only looking at about $600 million worth of carbon credits traded only in the voluntary carbon markets, not including the compliance carbon markets, and also not including Article 6 carbon markets. So that value is estimated to grow to about $6 billion by 2030 annually. Okay, and that is only on the voluntary carbon markets. Including the others, you can already see the scale to which we are going to achieve some significant economic benefit. Now, with this economic benefit comes some other benefits that touch on several United Nations SDGs. For example, with projects that are involved in renewable energy, we estimate that we will be able to have jobs. And if I can just put a number to it, for example, solar projects can give 1.5 times more jobs than their fossil fuel counterparts. Ecosystem restoration projects can give up to 3.7 times more jobs than their fossil fuel counterparts as well. In terms of health, for example, we have currently about 700,000 people die from indoor pollution every year, and that can be significantly reduced through clean cooking projects, which are part of these carbon projects as well. And again, there are also other very many UN SDGs that carbon credits can touch upon, that can range up to even ecosystem restoration, which is extremely important for us building our climate resilience as a continent.
Yeah. And that's why, we're having companies like your company, Verst Technology. I mean, you've been in existence for 2 years, and we are likely to see many more companies, joining this space just to ensure that this sector is exploited and exploited responsibly. Very good. Kayo, in the interest of time, I mean, we have to wind up, but we'll definitely continue to have more of these conversations so that we ensure that the conversation around carbon credit is elevated, and of course the people get to understand what is this. Thank you very much indeed for your time. Well, we continue to give you this and more when it comes to the coverage of AFDB. We are here at KICC. My name is O'Brien Kimani. Asante sana. And of course, Evans Kayo is the CEO or the Chief Operating Officer at Verst Carbon. Asante sana. Back to you, Hashim.